don't fully understand what is available to them. Like, this stuff should be taught in high school.
Yeah.
Like, it really, really should.
Yeah.
Like, this is crazy that, we talk to people in their 40s that don't realize this, or 50s or 60s or whatever age you are, 20, you should know. Sometimes when these financial systems are built, they work against you when you don't fully understand. And it's not like it's hidden information. It's very much out there, but we just don't teach it.
Yeah,
We have to teach Pythagorean theorem instead.
Welcome to the Ottawa Property Podcast with your hosts Tony McNeil and Adolfo Alvarenga. Each week, they'll take a look at what's happening in the Ottawa real estate market and offer practical advice and insights for listeners. From market updates to success stories, they cover it all. Whether you're a first-time homebuyer, a seasoned investor, or just curious about the property landscape in Canada's capital, they've got you covered. Sit back, get comfortable, and let's get into it.
Welcome back to another episode of the Ottawa Property Podcast. My name is Tony McNeil. I am a realtor based here in Ottawa, Canada, the nation's capital. Joined always by my co-host, Adolfo Alvarenga. He is a level 2 mortgage agent, coincidentally also in Ottawa. What a shocker. What a shocker. I will say, there's a big asterisk to this intro. I recorded a brilliant intro and my co-host didn't turn his bloody microphone on, so we're redoing it again. That being said, every week...
Take number 2.
Yeah, cut. That being said, this podcast, we dive into what we're seeing in our market here in Ottawa, any kind of trends, stats, stuff we're seeing in our teams, across our desks, real-life experiences for buyers and sellers. And, the only thing we ask of you is that if you are listening on the audio platforms, like the bloody episode. Comment. Let us know you're out there. We don't do any promotion for this, so share it with a friend. Maybe we should start promoting it. Maybe more people would be able to benefit from what we're talking about.
Yeah,
we're not just rambling on here, people. There's substance, and hopefully, and all jokes aside, you can actually gain something meaningful and useful out of this conversation. So that being said, Adolfo,
we had a seminar this weekend. Last weekend. Yeah,
tell me about this seminar.
It went great. I think that we accomplished what we said we were wanting to accomplish, which is to make it very casual and it be more informative than it feeling like a sales tactic, right? Like, we're not necessarily looking to, this is what we want to do. This is what we're trying to sell you. Get into the market. It was more of like, hey, what are your concerns? What are your doubts? What can we help you with to clarify? And we did clarify a lot of questions.
Yeah, we covered a lot of stuff, eh?
Yeah.
And we kind of went off script a couple times, which was great. Like I said, Adolfo said, it was very, very casual, no suits and ties, just like real people having conversations in an open space, judgment-free zone.
Yep.
That way there was no bad questions. And yeah, I think it was great.
Fantastic.
Yeah, we'll do another one in the future. But to anyone listening who missed it, just reach out. We can do a one-on-one, catch you up on what we talked about. One of those days we'll record that type of thing and share it with the masses.
Yeah, definitely. We need a.
Yeah, I think the difficulty with that.
It.
Yeah, that'd be great. We need a Chris in our lives for sure. The difficulty becomes, the market's always changing.
Yeah.
It's from month to month, certainly year to year, season to season. It's difficult. There are some evergreen questions, as they say, which apply to all current markets or all markets you're in. But it's always better to kind of live it in real time.
Yeah, but the thing with it is, like, even though markets change and fluctuate, like, a lot of the times the main bread and bones are always there, right?
I'm attacking Adolfo with a chainsaw in the back.
Sorry, I was like, what was that? Did I say something?
Someone's cutting down a tree outside.
Yeah, so like for example, like the one we talked about, like first time home savings account. The first time buyers, basically benefits that they get.
Yeah.
Either governmental or beneficial. Like, in one of the big misconceptions that we always talk about, and it's like there's two of them, but one of them it being that you need 20% of a down payment to purchase, right? And we've talked about this a couple of times, and I feel that we always have this conversation with clients that come in, or buyers. They're like, oh, well, this is how much I have. I don't have the 20%. But, like, in reality, you need a minimum of 5. In some locations, you need more depending on the purchase price. And then you need about 1.5% for closing costs, mind you, as long as you qualify. Like it's not just specific as like, oh, this is what I have, and then make it work. Your income also has to support that loan, right? But we had a hopefully a future client that had to believe of that, and we had a lot of questions about that too, right?
Yeah, I think it's that common misconception that is ingrained through parents, and that's how he had that misconception too, where he said, my parents said I need to have 20% to buy a house. 20% is not bad. Like I'm not going to sit here and say like, oh, you don't need to wait. Like, you don't technically. Is it better? Sure. You save more on a monthly payment. Yes, you will. But we don't live in a time of our parents. Like I think that's the most frustrating thing that the point of view we see it from is that our parents lived, let's say 20, 30 years ago when they first bought their homes, like housing prices were like less than half of what they are right now.
Yeah. To
save 20%. My parents told me that the first house they ever bought, and the house that we grew up in, they still own it. $89,000 is what it cost to buy that.
Wow.
Property.
That's
so
like the down payment of a house.
That's what I'm saying, right? So
right
20% of 89,000 is really not unrealistic for many people to save up.
Let's see.
If we look at the average price in Ottawa last month in April, it was $630,000 between condos, townhomes, and detached homes. So 20% of $600K, like that's.
So 20% of that 89K is basically 5% of a 400 something right now.
Yeah,
it's about 20,000 give or take. So it's 17,000 something and change.
So there becomes the conundrum of like, unless you have a very good nest egg already started.
Yeah.
If you're starting from scratch, or you're starting from 3% or 5%, you're trying to get to 20%. I don't know. I can't speak for everybody. I can speak for myself. I can't save that way. I can't save that way. No way, man.
No,
not a chance.
I wouldn't be able to. Like it's
unless you're living with your parents. I mean, maybe if you're not living with your parents, I don't know. Like if you had no rent, if you had no overhead costs, no car payment, no insurance, no credit card debt, no student loans, like how do you? You just physically can't do it.
It's hard. Like I mean, you would have had to hit Bitcoin when it first started, or hit the GameStop.
Yes, yes, those are the GameStop.
Again, it's you never know. Like it's very hard, right? Like everybody's situations are different, but like it's definitely more complex, more complicated to get to the 20%. And the last thing you want is for you to keep saving, and then that 20% just becomes 10%.
Yeah.
Of something 100%. Because the market just increased, right?
So let's say it takes you 10 years to save 20% of whatever purchase price. Maybe you have some, maybe not. I guess the point of what I'm saying is that, to Adolfo's point as well, by the time you get to that 20% goal, the market's outpaced. Like if you look at the trajectory of real estate prices in Ontario over the last, let's break it down by decade. Essentially, every 10 years, the price of real estate has doubled in Ontario in the last about 30 years, give or take, 30 years.
And it's
so
very
your 20% becomes, it's 40%. No?
Yeah, essentially.
So it's just, you're chasing your tail, ladies and gentlemen. 5%, the 5% rule is there for a reason. It's to make it easier for you to get into the market, so you do not have to save 20%. Yes, you will pay an insurance premium on the mortgage. Depending on the purchase price, on the low end, on a $400,000 home, it's probably about 10 or 12 grand, give or take.
It gets added to the mortgage,
yeah.
right? Like so, at the end of the day, it just depends on the down payment you have. If you have 5 or 10%, 15, it changes.
Agreed. I'm just saying the minimum on a 5% on a $400,000 about $10K, give or take. It goes on top of the mortgage, and you're not out of pocket for that. It's not like, hey, closing costs, we need another $11,000 for you. Yeah, you got to pay it off, but you got into the market sooner. And now you can ride that wave up. So instead of saving for 10 years, you're in the market for 10 years. You're making equity gains for 10 years, and you're paying down your principal along the way.
Yeah, we've seen clients or even people that we know that have been in the market for over 10 years, and the equity that they've accumulated in the property is double of, or even sometimes way more than that, than what. So you would never be able to save that in that fast rate. It'd be impossible, And but that's one of the things that we wanted to talk about, and I think we addressed it in the seminar. And the other one was also of you're able to buy a property more than once with just with the minimal down payment.
Yeah, I love that one.
A lot of the times it's okay. Well, I already bought my first. I'm not a first-time home buyer. I already bought my first property. I don't have 20%. And again, we go back to the same, and it's like a misconception. You're able to buy again with a minimal down payment as long as the story makes sense. You're either moving up or you're downgrading, but like you're still makes sense that you're moving in. It's not like, oh, I live in a single family detached home for my family and I'm gonna buy a condo.
I'm moving into a condo now.
It does not make sense unless you're doing that for a family member.
Well, if you were downsizing if you were legitimately downsizing and you were selling off that detached house, it maybe would make sense.
Makes more sense.
Right? But if you're trying to keep the single detached house
and then also
downsize into a condo, like
that'd be questions asked for sure. Like it would raise flags. But if you're buying it for like a daughter or family member, you're still able to do that too.
I love it.
So there's different solutions that I know that a lot of the times it's easier to just think that, oh, we can't do that, but in reality you can. Just ask the questions.
That's it, man. And you just nailed it. Ask the questions, have the conversations. Like that's the most, I'll say frustrating is not the best word for it, but it's a little frustrating when I see people and they just don't they don't fully understand what is available to them. Like this stuff should be taught in high school.
Yeah.
Like, it really, really should.
Yep.
Like this is crazy that, we talk to people in their 40s that don't realize this, or 50s or 60s or whatever age you are, 20, it doesn't matter. You should know.
Mm-hmm.
Like the sometimes when these financial systems are built, like they work against you when you don't fully understand. And it's not like it's hidden information. It's very much out there, but we just don't teach it.
Yeah,
we teach Pythagorean theorem instead.
I mean, there's also a reason why these programs are there by the government, right? Like the first time buyers, like programs that they have.
The first home savings account.
For home savings account, the RSP contribution, the land transfer tax rebate, like all these stuff are there for a reason, like to support you in that way, right? So I'm not saying you can't take advantage of them if you have 20%, you totally can, but it helps you get into the market. And I think that's the point of them, right?
And that's what it's all about. Getting in and start making the gains now. It's just you're leaving so much money on the table by trying to save. You really are. And I'm not just saying that from a salesperson's perspective. Like,
how dare you?
Well, just
how dare you pump
I
up
look
the
at
market.
it frustrated from like I said, from an institutional standpoint, that you're not taught this in high school. Like, if we had been taught this in high school, man, none of us would have been farting around after high school or university. We would have been trying to save to get in.
Yeah. Well, I'll be honest with you. The meeting we had yesterday, I was hats off.
Yeah, he was
so
way
impressed.
Ahead of the curve for sure.
Like for a 25-year-old, where he was at, I was like, he's crushing it, and like he's still gonna keep crushing it.
Yeah.
But it was very impressive. Like, obviously not to get into details of it, but like way ahead of what I've seen even clients later. And
his
obviously life
and
situations are different.
Yeah, everything about it.
He was very good head on his shoulders for sure.
Yeah.
I'm very props to him for sure.
It'd be cool to watch him succeed for sure.
Yes.
I wish 25-year-old Tony could have been a fly in the wall for that conversation.
25-year-old Tony would have
I
probably
could go back a decade.
Would have probably been the full opposite of that.
No one wants to see what 25-year-old Tony was up to. I can guarantee that. Okay. That being said, I think it's a good transition here. We've had some numbers come out for April, and we've kind of done some stat episodes where I sit here and I spew numbers, and I don't really think anyone wants to hear me talk about numbers.
I really don't want to hear your talk and then talk numbers. Then it's like also,
it's hard to follow. Like, I listen to podcasts and they do stats, and I'm like, it's just, for me, it's hard to conceptualize what they're saying, because you're like, I'm trying to write the numbers in my head while they're saying it, if that makes any sense. Anyway, we're going to give you an overview, but I kind of thought it'd be interesting to talk about just the spring market as a whole, not just April numbers, but like what we're seeing and where we could potentially be heading. I'll make some predictions, as I like to do. Brought the crystal ball for this episode. But yeah, you saw that. I shared the numbers with you. What did you think?
It seemed like a slow April.
Yeah.
Compared to other years, compared
slow
to
and steady.
Even March itself, like it seemed like very slow. And I wonder, did it have to do anything with the election?
I would say absolutely it did.
Yeah. So that's the curiosity point side of me of like, okay, what influenced this to be slow in that way?
Yeah.
Were our minds as citizens more invested in that election? Or were we just considering like, oh, let's see what government takes over, so then we can decide to make what moves, right? Because like
I mean, sure, especially in a government town like Ottawa.
Yeah,
And
you want to make sure.
you need to know your job is safe.
Yeah,
I mean, it's
totally.
the biggest employer
Yeah.
of our city here.
Yeah. So I can understand why that was slower than the rest, like other months. But please tell us.
Yeah.
What were the stats?
Okay, the stats. So 1,300 homes were sold in the month of April. That is down considerably year over year. So it's down about 11% year over year.
Oh.
And last year, if you remember, was slow. So we're slower, but prices still haven't
Drops.
come down. They just haven't.
Well,
They've
if
been- actually,
anything-
detached was up month over month. Townhomes are kind of the same. Same with condos. I don't think condos budged at all. Actually, honestly, think since I've been really hyper focusing on Ottawa stats specifically,
Yeah,
basically since I moved here, condos has been like total flatline, man. Like it's around the 400. Sometimes it goes 395. Sometimes it goes 405 month over month. I don't think it's if it was me and I'm looking at a condo, there's no bad time to buy right now. Like the sellers want to sell and you'll probably get a good price. I don't think it's going to come down from there. I really don't believe that. But regardless to say, it is certainly slower year over year, month over month,
Totally.
regardless of what the prices are doing. We harp on it all the time, but we have a supply and demand issue, right? Like we don't build enough homes to meet demand, even if the market is slowed on a transactional basis.
Mm-hmm.
Demand is still there. Like,
Oh, well, we see it. And like, I was
We-
gonna comment this. Like, we haven't seen like the prices year over year or the sales of year over year have dropped, but it might be slower than what it was last year in April. And last year ended up being a slow quotations year, but I didn't see last year a lot of offers being over asking or
No.
multiple offer situations compared to how much I've seen in the last 4 months.
yes. Yeah.
You know, that's just me, one broker in the city, getting offers coming in where it's like, oh, we have to do this. We may have to remove the inspection of financing. You know, like, and just to be competitive in some ways. Like, and I'm like, well, I've done my due diligence as long as you know the risk, obviously, right? But it's compared to last year, I didn't feel we were in the same situation. I feel that there was more flexibility.
I think
on
you're
that.
right. I think you're right. So, and to back up your claim, which I think is totally factual, new listings dropped in April as well. So
Okay.
there was less homes coming to market. Maybe you're right in your earlier statement as well about the election having something to
Yeah.
do with that. I think it's overall economy too. It's just like it's just how we feel. Like maybe people are just like, you know what, this is not the right year to move. I'm just not going to do it. And there's going to be people that inherently need to buy and sell. That's life. But you know, people are kind of like, maybe I'll wait till next year. I'll probably feel better about it. We can survive one more year in this house type
Yeah.
of thing. But yeah, to your point, like if new listings are down and inventory is creeping down as well, so we're down, I think it was like 5% in inventory month over month.
Mm-hmm.
You're having less to choose from. So to your point about seeing more multiple offers, that type of thing, the best properties are going to sell. The ones that are priced the best are going to sell. There's just not many of those properties to choose from. So the ones that are getting scooped up very quick are going to go in competition because people want them. Because there's not a lot of new stuff coming to market that is raising eyebrows.
Yeah, and to add to that, like, I just realized I had a client this week lost in a place which was basically priced lower than what the market was, and I think it was just to create
A little bit of buzz.
a little bit of buzz.
Okay, so
They
townhome,
put it-
detached, condo.
full detached, $1 million mark.
Oh wow.
Yeah.
Okay.
And they made it an offer, and I think they put about 50K over asking.
So
Somebody-
$1.5 million or $1.50 million, sorry.
The price I think was
Ish,
$1 million.
whatever.
Yeah,
Yeah,
so it
doesn't
was
matter.
closer to $1.1 million because I think the price was $1.50 million. So they put up about $1.1 million. Somebody outbid them by like 25 to $1 million to 50K more, I think.
Yeah.
Their offer was competitive enough, but there was somebody, and they even asked like, "Oh, do you want to offer more?" But obviously, they could if they would have wanted to, but if that was their decision to make, right?
Everyone has their ceiling.
Yeah, but at the end of the day, then they had their sale of their home too to deal with again. So it's like,
Was there a sale of property too?
no, there was
okay.
none of that condition because in the weekend they had an offer for a place that they were also negotiating for on their place.
Oh, So their place has already been listed.
Yeah.
Okay.
Their place is listed too. So
Okay.
it was
Okay.
just one of those things that
What area of town is this?
Finley Creek, south.
Okay. Yeah, it's competitive. A lot of people want to be there.
Yeah, it's a good neighborhood, I feel.
Yeah.
But the crazy part about it was like basically over asking you're talking almost 100K over asking.
I wonder if the other people drop their conditions or not.
I have no idea.
It sucks to lose. That's the nature of the game sometimes. We don't always win.
Yeah. What my point is, we're seeing these over asking
Absolutely.
again. And now that the insurance guidelines or the insurance requirements are past the $1 million mark, these houses fall under insurance policies, which a lot of the times we don't need an appraisal for.
Yeah, sure.
Right. So then you're okay. The new insurance is 1.5. Like, it kind of will this also creep up and be like, okay, well, we can offer a little bit more if it's the one that we really want, right?
Well, and that's the nature of the beast sometimes, right? You
Yeah.
lose enough times, and then all of a sudden you end up paying a little bit more than you would have because you're just tired of losing and you want to get it done.
Yeah,
Right.
and it's a stressful transaction because obviously it's important, but it's also the time it takes to find something. And like you said, not a lot of how homes are coming into the market.
Yeah. So then you have that in the back of your head, like, oh, if we miss out on this one, like there may not be another one for the next 3 weeks. We just sold our place. We need somewhere to live.
Exactly.
It's stressful, man. Like buying
Yeah.
versus selling, buying first versus selling first. That'd be a fantastic topic maybe for next week.
Buying first over we've touched on it in a couple episodes.
We kind of touch on it, but really dive
into
about
it.
what that would mean. Because we have a client in Orleans now I've got their house listed because they had to sell before they buy. Like they just you can't afford the risk of the financial burden if they buy first.
Both.
They can't do it, right? So
yeah, that's hard.
it's tough.
It's tough. It's because especially given the market that we're at, where like there's not enough supply of it, like, but there's still a demand. Is you're gonna overpay maybe on the sale, on the purchase, and then or if you do it the other way around, you might take a big haircut just so that you can,
because you got to sell, right?
Yeah. So it's a difficult situation to be. I feel that in other times it was easier.
Yeah,
You had more of an inventory around.
Or you had more buyers that were willing to put offers in on
That
property.
too.
So when
That
sales volume is down 11%, that's 11% less people that are out making offers on homes. Right?
Yeah.
So, you got to try to get your slice of the pie, but you got to be very, careful which pie you're going to eat first. What the hell kind of analogy was that?
Tony's talking about dessert
man,
right
I must
now.
be hungry.
Which dessert am I gonna have? This chocolate cake or this
I'm like
fruit pie?
I'm like a typical white guy. Like I love apple pie and vanilla ice cream.
Oh, there's nothing wrong with that. I love that.
Best
Speaking of ice
dessert.
cream, I have
Creme
ice cream
brulee
in the
too,
fridge.
but anyway, I digress. It's not a pastry podcast. Back to the market in spring. I think it's going to be a very interesting, and I say this all the time, like I do love the numbers because they do paint a picture, but I think if I can make a prediction, we got the ball here.
Crystal ball, please.
Here it is in all its glory. I think we're having a delayed spring market. So I'm calling it today. I think that this time next month, when we have numbers from May, we'll see an uptick in sales volume. Pricing will probably be up, maybe a little bit and everything. I don't think you're going to see a massive jump by any means. I do think inventory will probably hover around the same because there won't be enough sellers to react quickly enough to get their property to market unless they're already considering it. Like, it's going to take 2 to 4 weeks depending on the property to get it ready, listed and up on MLS. So I do think inventory will stay the same, and sales to new list ratio. I think that's a tough one. Maybe it stays the same. Maybe
Where is it at right now?
It's basically 50%.
So it's a
Very
balanced
balanced market. Yeah,
that's very good.
balanced market. But people have to make concessions on both sides, so
No, of
everyone
course.
can win here. But so here's the thing: late spring market. I think you're looking into it like a summer market that's going to be very strong as well, just like last year. Like I did some of my heaviest volume of transactions last year was August, September.
No.
So I think we're going to see something similar. I think May, June, July will be like our regular 3 months of spring market. Like if it was me, I'm not planning any vacation until August or September at this point because I think There's going to be lots of people making moves. Once this federal government settles in a little bit, I mean, this Tuesday he met with Trump, denounced the 51st state thing. I guess he kind of rebutted it a bit, but I don't think the tariffs are going anywhere just yet.
Yeah.
So we need a little bit of time for all that dust to settle. Feds get comfy. People feel comfortable as Canadians, kind of like living in the new normal, what that is, and then they say, okay, yeah, this is the time we're going to do it. So we got to move the kids before September. So they're going to be under the gun to get stuff done quickly. So that's the prediction. You heard it here first.
I don't disagree with that prediction, because we've also, in my line of work in industry, like I've seen it where May, June, July, August are the busiest times a lot of the time. Like it's late spring.
But those are busier for you because of closings, no?
Yeah. No, but just in general, the offers, like, yes, for you it'd be different because you're putting in those offers from beforehand.
Yeah, there's a bit of a lag between, I guess, when you're submitting your final docs and stuff like that.
Yeah, for that. But it's just, we just get more inquiries as it goes. And now that hopefully the dust is settled, what's going to happen with the rates come June? So we have a freebie of a month. Like May, there's no announcements. There's nothing going on. So what happens?
Decrease.
June. So, well, obviously, I think it's too early. Let's see what our unemployment and inflation numbers come up to in the month of May. But now that everything's settled in, we're seeing, okay, what is the Bank of Canada going to proceed with?
Interesting. Hear me out. I'll speculate on it a bit.
Sure.
I'll just riff here. I think unemployment will be up.
Okay.
It's inevitable.
Okay.
Based on layoffs in auto sectors and manufacturing and that type of thing because of the tariffs.
Because of the tariffs, okay.
I do think inflation will be down, and that's because when they cut the carbon tax, that'll have a lagging factor too. Like, it probably wasn't really picked up on immediately in their latest inflation report. So I bet you that, that gas coming down will help bring down core inflation.
Okay.
So if unemployment goes up, inflation goes down, it's a rate cut.
Yeah. And most likely will probably be the case. I'm a firm believer that they hold because of the election, the tariffs, the uncertainties, and it was just like, okay, it's safer if we do this.
Covering our asses, boys and girls.
Yeah. So we'll see.
And that's it. I just called it.
Okay, sounds good. Great job.
That's it. Podcast is done. Few weeks
later, I'll ask, like, by what? Tony's going to be 1%.
No, I tried to go big on that last 50% one. That didn't work out. It was 25. But I think, I don't know. And I'm optimistic. I'm excited to see where it goes. I think there's a lot to be motivated about for buying and selling. If you're a buyer or a seller, I think, you got options. So you just got to, like I said, at the beginning of the podcast, have the conversations.
Yeah. And that's the most important thing for sure.
Yeah.
Speaking of, like, you can always call us, email us.
Yeah.
Our details will be below.
Are literally in the bottom every episode. They don't go anywhere. They don't change. No one's ever booking on the Calendly link. Yeah, that's a good picture of the spring market. So, we're seeing the activity now. Like, this week for me personally hasn't been too crazy. Like, I did a lot of helped a lot of buyers over the last month. More than usual. Like, our team is steady. Like, even the volume down, like, our team seems to be trucking along. That's good. Like, there's absolutely no complaints there. We get to help people like that. But in terms of what the week looks like listings are sitting. Like, some stuff's not moving. Showings have dried up a bit. We'll do some open houses this week. I don't know. Mother's Day's coming up. It's probably going to be another slow weekend just because of that, man. Like, I'm not going to do an open house on Mother's Day. First of all, because I'd be killed. Louise would murder me. But secondly, like, I've done them in the past, when I was a single guy, and they were slow.
Yeah. It's not the main focus for the day.
No.
It's like, that's especially giving, if families are looking for homes, which is the majority of it, but like, they're celebrating Mother's Day. They're not.
Yeah. I used to work at the Keg, and Mother's Day was the busiest day of the year.
Of the year.
At the location I was at, anyway.
More than New Year's, more than Christmas.
Yeah, Valentine's Day, Father's Day.
That's very good.
Yeah. So I get a lot of PTSD. I don't go near restaurants on Mother's Day anymore. I'll
So
be
it's like, I'll make the steak at home, please.
yeah,
That's it.
yeah. I was perplexed by that. I never understood what you want to bring mom to a steakhouse for. Like, I guess my mom would have enjoyed it, but I don't know.
You should ask her. How was he? I think she probably would. I think going for a
she'd-
steakhouse is still
she'd be
good.
like quintessential mom answer. Like, I just want to spend time with you guys.
I'm sure she
Yeah,
probably
yeah.
would.
What about you? You guys anything crazy going on this week?
I have a friend's big barbecue on Saturday.
Big
He always
barbecue.
goes all out and makes like this.
Oh,
Big
like
celebration.
Whole pig or what?
No, he's making Italian food, so it's Italian
Sorry.
theme. So it's not a barbecue; it's
yeah,
a birthday.
you're losing me, man.
But yeah, last year was a American theme, so like there was a lot of
It's a
like,
barbecue.
yeah, ribs,
Yeah, yeah,
but
yeah.
you know.
Italians are
pork
not
belly.
really known for their
No,
barbecue.
of course it's not barbecue. Right, I mean we're still gonna have porchetta, meatballs, and all that stuff. So there's
Oh,
still like a
sounds
protein and stuff.
delicious, dude.
And then obviously Sunday is a family day because of Mother's Day and stuff like
Yeah,
that.
yeah,
So
yeah. I mean, this is
it'll
a
be good.
bit of a shorter episode than usual, but not a bad thing by any means, guys.
Yeah.
Thanks for listening. My gosh, if you made it this far, just drop us a comment with whatever time is on the screen to kind of let us know you made it 30 minutes and 21 seconds.
How
Just
far you made it
tag
through?
us there.
How far you made it
Yeah,
through?
yeah, we appreciate you listening. But in all seriousness, like if you do have questions about what's going on in the spring market, just reach out. Send it to
Let us
someone
know.
you think could benefit from it. Like, we are easygoing guys. We just want to help people. That's all it's about. So there is lots of opportunity out there, regardless of what side of the table you're on. But you just need some experts in your corner to kind of
Yeah.
help you navigate, what the heck you're going to do with it.
Yeah.
Cool.
That's the most important thing. So with that said,
Rock and roll.
see you guys. Peace. You good?
Yeah, that was good.